Hey, what's up, ICT traders? Welcome back here. It's Solomon King here. It's been a while. I've actually made a video on this particular YouTube channel, and that is because I have been on a break. I've taken a break from making content on social media. But while I was on break, guys, I've gotten so many questions from you guys. And for those of you who have missed me, you can actually tell me in the comments. Thank you very much, guys, for everything you've been doing. Now, one of the questions I've gotten repeatedly on my DM is this particular question right here. It's about POI. All right, POI. POI simply means point of interest. Now, one thing that is a common challenge to a lot of traders out there, it's the inability to know how to take trades. They know when to take trades, but they don't know how to do it. All right. And if you are able to wait to the end of this video, I'm going to demystify everything for you in this particular video, because that's basically what I do every time I come across the chat to explain something to you guys. Point of interest is very, very powerful, and you cannot use point of interest single-handedly. You need every single ICT concept to be able to use it properly. That is why I'll go through everything here to show you what a point of interest is and how to use it, or how to take trades with a point of interest, bringing in market structure, bringing in things like time frame, and how to factor in everything in detail. All right. So for example, this particular one was a trade signal I shared with my community members, but then there is a lesson there. There is a lesson there which I want you to understand, and I want you to also learn from it. So looking at that point of interest, the average or the normal ICT trader, what we normally do is that, look at this, breaking it down. This is the 15-minute time frame anyway, right there. And look at this. Market structure. If you know market structure properly, this is a shifting structure to the upside. But then price went up, hitting this area where you see this guy. You have a bearish order block and this rejection area. Price came back all the way again and shifting structure to the downside, which is a proper price delivery algorithm. All right. As price was moving to the downside, market structure shift. Price was moving boom, 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 down to this area. It has finished the movement because price cannot move in a particular direction forever. Definitely you have an exponential price movement. Every time price moves, you will find price doing something like this. Push down, retrace, push down, retrace. This is a bearish scenario, retrace. And this is how price behaves as it keeps moving in a particular direction. So if you see price behaving that way, you break structure to the downside, coming back, we normally take trades here. Break structure to the downside, comes back, we normally take trades here, regardless of the time frame. So the same thing happening here. Price shifting structure to the downside. And look at this. If you know your ICT concept properly, this is one of the institutional reference points. Boom. And that brings us to the subject of POI. What exactly is a POI? A POI can be any of the 7 institutional reference points. Point of interest, where you're supposed to have so much interest in, or where you're supposed to take your trades or to have so much focus on. So it can be any of the 7 institutional reference points. It can be a breaker block. It can be an order block. It can be any of them, guys. All right. It can be a breaker block. It can be an order block. It can be a mitigation block. It can be a fair value gap. It can be a rejection block. So once you are able to mark that area, you will now put your focus on. But here is the problem with so many traders. Let me show you that. The problem with a lot of you guys is that you don't know how to do it. Now, this is a typical example of a breaker formation. What is a breaker? Breaker is basically the last sell candle here before price clearing liquidity above this high, crashing downward. That is your breaker block. All right. That is liquidity, and your breaker block becomes here, which is literally your point of interest. All right. Literally your point of interest. This guy. Let me delineate it properly so you can see it. That becomes your point of interest if you're taking trade. So for those of you who want to take trade, If you look at this, it has satisfied almost everything that ICT taught you, which is looking at order flow. You have boom, bearish momentum. You pick your fib level, putting it here to here. What do you have? This is your discount area. This is your premium area. A lot of you are asking me to show you how I'm using my fib levels or my Fibonacci tool. How did I get that? If you get access to any of these, fib level, this is it. You can come here by my left hand side. Your Fibonacci retracement is what I'm using. I just ticked the favorite and it is right here. You can see part of the selections there. So if you come to settings, what I normally do on my Fibonacci tool right here, let me go back to that again, click on it. I think I'm missing out something there. So from my Fibonacci tool right here, if I click on it, come to settings, you will discover that I have only 3 points. What I basically did was to untick every other value there and have 1, 0, and 0.5. And in that regard, I will be able to see 0%, 50%, and 100%. To get the percentage, if you like, you can scroll down to where you see levels here and where you see percent. You can have values and you can have percents. So that was how I got the percentage. So if you have the percentage, basically what ICT thought is that above the 50% level is called premium. And this is the law of business. Every businessman out there wants to make money. And how do you make money? It's only when you find a way of buying a product or any of the goods or raw materials at a low price and then sell it at a high price. The selling price and the buying price, the difference between that gives you the profit. And this is why we do it. When we buy here, we want to offload it here. All right. And if we are selling here, we want to buy from here. That is how we do business. Nothing else. It's more than that. So this is why I am basically showing you that premium and discount. So if price is going here, coming to the premium area, a lot of people will be interested in selling here, not here. That is why we don't sell at discount. When we sell at discount, we are actually wasting our resources because that is too cheap for us. We will not make profit. And that is why a lot of people make mistakes when you're selling in a discount area. You sell in premium and you buy in discount. It is better you buy here and sell there. And to buy here, it's pretty much easy. It's called counter trading. I've thought that maybe I will do a revision on that. If you want me to do revision, you can let me know. So as price begins to retrace back to my point of interest so that I will sell again, there is something you need to do. You don't just sell it blindly. You also need to follow this rule I'm bringing to you. This is the 15-minute time frame. So price is going to retrace back into my point of interest. But a lot of you people just go ahead and sell. If you put your entry here, what you normally do is say here, and your target is basically the opposing liquidity or the drawn liquidity. You want to sell immediately, price comes back there. Let me show you. You see, this is when some of you begin to sell. The problem with this is that you will not be able to be sustainably profitable for long if you keep selling from here like that without confirmation. You need a confirmation, and this confirmation is what I'm going to show you in this video. So in order to get that confirmation, if you have a bearish trend and now you have changed to bullish retracement, in this movement from the 15-minute time frame, this is how it will look like. All right, boom. In the 15-minute time frame, that is how it will look like. Let me show you. This is how it will look like. This is the 15-minute time frame. You have a breakout structure to the downside. But if price begins to retrace, if you zoom this in the 5-minute time frame or the lower time frame, this is how you're going to see it. Price will do something like this. This is how it is on the lower time frame. All right. The lower time frame is going to show you like this, which means this movement downward is an entire price action for somebody. So if price begins to retrace, it gives an uptrend. And what is the normal rule? The trend is your friend. So as price begins to do this movement, break of structure, this is an uptrend. Do you go against a trend? Definitely no. That is why I keep telling you guys, you don't go against the trend. You follow what the trend is doing. All right, you follow what the trend is doing, and that is how to stay away from trouble. That is basically how to stay away from trouble, when you follow what the trend is doing. So this is it. If you want to take the sell, you don't just do it haphazardly. You follow this simple rule. You wait for the retracement to finish. And how do you do that? From 15 minutes, now you will have set of time frames. If you are looking at this from the 1 hour, you will drop down to the 15 minute. Minimally, you can go to the 5 minute. That is the least time frame you can go to. If you are doing it on the 15 minute, if you're watching your major trend from the 15 minute, you can do the retracement on the 5 minute or the 1 minute. If you are doing it on the 4 hour, you can do your retracement on the 1 hour or the 15 minutes. That is the least time frame you can go to. So that means if I should go to the 5 minute here, let me show you how the retracement is going to look like. Perfect. Are you now seeing what I'm seeing? So while price begins to make the retracement, this is it. Price had a shift in market structure here, boom, and then it came back and started the uptrend here. It is an uptrend, boom, break of structure, boom, break of structure. Who wants to go against a trend? Nobody wants to go against a major trend. The trend is your friend and you don't want to go against it. That is why I tell you to wait patiently. As price comes back here, you're going to wait patiently. If you are taking this trade without that understanding, this is what will happen to you. Let me show you. If you're taking it here from the 15-minute time frame, this is what will happen to you. Let me go to the 15-minute. This is what will happen to you. Here. All right. This is it. Let me keep everything clean so you see. If you're taking it from here, this is what will happen to you. Boom. You're stopped out. Why? Because price never showed you that the uptrend has finished. The lower time frame uptrend has finished. I will show you what I'm saying, guys. If it comes here, if it finishes, it will show you a shifting structure, and that is the right time to take the sell. All right. It is only when you finally see a shifting structure in the retracement that you are ready to go for the sell. Except if that happens, you have no trade. And I told my community members, even though this looks like a beautiful trade, we are not going to take it because we don't have a shifting structure. That is how I get my secret. I get saved from wrong trades because of these secrets. All right. Let me quickly show you another example, and then you will see how important it is. All right. Probably still on the same pair right here. Let's see if we can see a particular example. All right. Look at this. A particular example. Even though this one did not sell to a major place, look at this price movement. Price started moving from here, all right, all the way down here. Premium and discount, right? Let me give it a proper view so you can see. Premium and discount. If you want to use, which of this one would you use as your point of interest? Definitely this area that looks like a breaker block. And look at what price did at that point. While price was coming, it gave you an indication that it is coming right there. It came to this breakup because we can literally see price pushing above this guy, which makes it a bearish breaker, and then shifting structure down here to the moving downward. All right. As price kept moving downward, you can actually see that price reached here. Now, notice what price will do here. Notice what price will do here. If you go to the 5-minute time frame, you would see exactly how price changed direction. Now, notice what price did. Boom, 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 as price moved upward. Now, it matters where the shifting structure happens. I am not saying the shifting structure will happen here and then this is a shifting structure, yes. But the shifting structure we are looking for is at the point of interest. It is only the one at the point of interest that we are interested in. Not all this one, not this one. No. All right. It is the one at the point of interest. Now, look at this. As price came right here, did we see a shifting structure? We did. That is the change of character. And this is when you are ready to go for the sale. If you enter the sell after the shifting structure, you may hardly get stopped out. But if you don't see a shifting structure and you decide to enter a sell, you may get stopped out. And if you use this, you will get at least 70% accuracy in your trades and maybe 30% wrong trades, maybe because of emotion and different other things. I hope you're understanding this. This is how to do this secretly. A lot of you guys are making that mistake. All right. Another example, I saw this on ES Mini, the future synthesis. I was even sharing it with one of my one-on-one students, and I wanted to show you how this thing works. So going back to, let me go to the higher time frame. All right. Right here. So look at this. Look at this. Price was bullish all the way, and then all of a sudden we have price moved up, but then we have a shifting structure, which is officially telling us that we are downtrend. If we do premium and discount here, where is your point of interest going to be? Definitely this area where you have volume imbalance and then you have a bearish breaker here. That is your point of interest, not this fair value gap because of PD-ARRAY. Your breaker comes before fair value gap. So this becomes your point of interest. And then this is it. Price can even pass this guy and reach the fair value gap. That is why you will need to wait for the shifting market structure. Now, on the 4 hour, I'll drop down to the 1 hour time frame to see that area, how price will do at that point. If I go to the 1 hour time frame, I will see exactly what price will do. You now see what I'm saying? Price reached that place. This is an uptrend. You see, uptrend. I don't want to go against it, but then boom, a shifting market structure came in. After that shifting market structure, price gave me an entry. Is that not an entry for you? Price gave you an entry, and that is how to trade it, guys. That is how to trade it as price kept moving downward. A lot of examples I will wish to show you, but then go ahead and check your charts. You will see this time and again. Shifting market structure at your point of interest is the ultimate confirmation before an entry. Guys, if you like this video, go ahead and share it. Give me a like. Some of you don't want to promote my videos. Keep inviting people. All right. A lot of value I'm giving out there. It costs thousands. You need to pay so much to get it. All right. Thank you very much, guys, for watching. I will come right back here subsequently. See you in my next video.